So I built one of the biggest businesses in Africa in marketing and advertising, and I sold that business. Very successful sale. I can talk about it because it's pretty public. We sold that business for north of $150 million in its day.
The way of Will John.
All right, people, we are back. We have, of course, with us today, Neuner, founder of Onchain Capital, a fund management business that offers eligible investors portfolio management within the blockchain and crypto asset class. Ran is also one of the hosts of Crypto Banter, a YouTube channel that aims to share news about crypto and present educational content on Bitcoin, DeFi, NFT, blockchain, and cryptocurrency. Neuner hosts interviews with the biggest industry guests, billionaires, thought leaders, and professional traders every day. So, Ran, what's up, man? How you doing?
What's up, man? How's it going?
It's going well. It's going well. I'm glad we can do this.
Yeah, I'm glad. What a great intro, man. It's like I feel like you're blowing me up.
Yeah, I am. This space is huge. You know, we got a lot to talk about. I mean, we'll see what we can cover here within an hour. But why don't we start here? You know, we're still in the early days of crypto, obviously, regardless of how long people's crypto journey has been. And we had somebody on to talk about NFTs last week, which we probably did that backwards because it would have been nice to have you on first to start that whole ecosystem and why NFTs are important, or if they are, I don't know, we can get your take. But why don't we start here? How'd you get into this? And then we'll get on to what crypto is, what that means, and then we'll get to Bitcoin and we'll just go from there.
All right, so let's talk about how, and probably more importantly, why did I get into crypto? Because the how is nothing. It's the thinking behind the why, which will probably make a lot of sense. So I'm a serial entrepreneur. I had many failed and successful ventures, but I had a very big venture, which was I built the biggest marketing company in Africa. It took me 15 years to build the biggest marketing and sales company in Africa. And after 15 years, I sold that business. When I sold it, it was the biggest agency in Africa. I had 1,550 people working for me in 70 offices on the continent. And if anybody knows the African continent, you'll know that having 70 offices across Africa is a huge feat because there's no infrastructure, and in some of the countries you can't get stuff to them. So I built one of the biggest businesses in Africa in marketing and advertising, and I sold that business. Very successful sale. I can talk about it because it's pretty public. We sold that business for north of $150 million in its day. And the reason why I sold it, everyone says to me, "Why did you sell a business when you were at the top of your game and you guys were growing and you were landing every single account?" And I said, it's very simple. I was living in a linear world. And in a linear world, you have to work harder to make more money. You want to make more money, you got to get more customers. You got to get more customers, it means you got to have more office employees. You want to have more office employees, you got to open more offices. You want to open more offices, you got to have more people. You have to spend more money. And so what I felt like I was running on a treadmill. And somebody else held the remote. And so no matter how tired I was getting and how much older I was getting, I felt that the treadmill was being turned faster and faster and faster because we wanted to make more money, but we were living in a linear world. And then I realized that around me, there were a whole lot of other businesses which weren't linear. So I looked at a business like Uber, where I kind of realized that Uber, it's an app and it's a platform, and you can add more drivers to it and more users to it without actually adding more office staff and more offices. And I kind of thought, hold on, this is great. And then, I looked at Airbnb and I looked at all these businesses and I thought to myself, hold on a second. All these businesses are doing it right and I'm doing it wrong. I'm living in a linear world and they've embraced exponential thinking. So my next step was to train my brain to think exponentially, which is quite difficult because when you've been doing something for 17 years, it's like learning a language. You speak a certain language. Now what you have to do, it's like if you've been speaking English your whole life, and I say to you, look, you're now moving to China, and the rules are that you have to learn Mandarin, but you got to forget English because you can't speak Mandarin English combined. I'm giving you an analogy. And so I went on a journey to teach myself how to think exponentially. I went to my first point of call was doing a master's program at Singularity University. I then went to Harvard and I studied as many modules and courses that would teach me to think exponentially. And I went on one mission. And the mission was to train my brain to think exponentially. And that's when I discovered crypto on that journey. And once I discovered crypto, and once I discovered exponential thinking and realized that crypto was the ultimate in exponential thinking, when I came back to my marketing business and I tried to operate in a linear environment anymore, It was as if I had forgotten how to speak English. So I walked into this office, I was speaking Mandarin, everyone around me was speaking English, and I realized that either they all had to leave or I had to leave. And so I left, I bowed out, and I started to pursue a career in exponential. And I realized that the most exponential thing in the world was crypto. And maybe that's the next part of what we should talk about.
Sure. Absolutely. I mean, there's a lot to uncover within that. So I'll think I'll come back to it so we can stay focused, and I'll come there. When was this, by the way? When did this all happen?
Around my exponential journey started around 2014. So 2014, 2015, that's when I went on the exponential journey. And by 2015, I was all in on crypto. And I'll tell you why I was all in on crypto. So I went to a lecture in one of these courses in Harvard, and the lecturer asked a very basic question. He said, what are the most valuable companies in the world? So if I were to ask you, if I said to you today, what are the most valuable companies in the world? Who are they?
Google, Amazon,
Apple, Facebook, WhatsApp,
Apple. There you go.
Uber.
Right.
So once you know what the most valuable companies in the world are, you got to ask yourself, what do all those companies actually have in common? So what is the one thing, and there's only one thing that all of those companies have in common, other than the fact that they're all technology companies? Because I know naturally what you'll say to me is they're all tech companies, okay? But other than the fact that they're technology companies, what is the one thing that they actually all have in common?
I can't put my
I'll
finger
tell
on
you,
it at all.
they're all networks. So Google is a data network, Uber is a transport network, WhatsApp is a communication network, Amazon is a retail network. So let's talk about what a network is. A network is any system or ecosystem where every time you add a user to the network, the value of the network increases. So I'll give you a very simple example. Okay, so let's say that there's WhatsApp, and you use WhatsApp and I use WhatsApp, and we're the only two users on WhatsApp. Then I can call you and you can call me. That's the maximum number of calls that can be made on the network, because the maximum number of calls on that network is I can call you, you can call me. What if we add a third person to the network? Now I can call you, you can call me. I can call him, you can call him, and he can call you and he can call me. So we've now, by adding one user to the network, we've increased the value of the number of calls we can make on the network exponentially. We went from 2 to 6 by adding one user to the network. And so what you realize is that all of these platforms that we spoke about, every time a new user joins the value of the network increases, but not linearly, exponentially. I'll give you an example. Let me give you another example. So let's talk about Uber. The more drivers there are on the road, the quicker the wait time, the shorter the wait time. The shorter the wait time, the more people use Uber. The more people use Uber, the more drivers. The more drivers, the shorter the wait time. And so what you realize is that companies that have the network effect continue to grow exponentially. So they're actually governed by two rules. The two rules that govern this.
That's brilliant. The
first rule is called Metcalfe's law. These are not coincidental. It's actually scientific rules. And when I talk you through the rules, you'll understand the laws. The first law is Metcalfe's law. And Metcalfe's law is a very simple law that says in a network, and he specifically refers to a telecommunications network, he says the value of the network increases exponentially with each new user. So that's the WhatsApp example. The value of a network increases exponentially every time you add a user to the network. Now, there's another law, and the other law is called Barabasi's law. Now, Barabasi says that in an environment where there's no regulation, which prohibits people from making their own decisions, users will flock to the busiest networks automatically. Give you an example. WhatsApp, if you land in a country and you're faced with a decision as to which telecoms network to join, would you join WhatsApp or would you join a small startup? You'd naturally gravitate to WhatsApp because everyone's on WhatsApp. And when you do, you will join that network and you will add value to that network exponentially. Same thing with Uber. If you land in a new country and you can choose to use Uber or you can choose to use a small local competitor, you'll naturally gravitate towards Uber. That's Barabasi's law. And when you join it, you will perpetuate Metcalfe's law and you'll add value to that network exponentially. So now you realize that all these companies have this very lethal thing, which is called network effect. And when a company has network effect, you cannot stop the company and you cannot stop the growth. So imagine what you're talking about. You're talking about a company that can't be stopped with growth that can't be stopped. So let's just look at Google, right? So Google we said it's a data network. The more you search, the more refined the AI algorithm becomes. The more refined the AI algorithm becomes, the more accurate the search is, the more likely you are to use Google to search, the more refined the AI algorithm becomes. And so then eventually they just grow and grow and grow. Now, there are only three things that can destroy network effects in the world. There's only three things. Once a company has network effects, it becomes such a self-perpetuating cycle that there's nothing in the world, that there are only three things in the world that can destroy the company's network effect. And that's very scary because you think about Google, Facebook, Uber, Amazon. Those are companies that probably you can never compete with now, from now until the end of time. We have had one anomaly in this environment, and that's TikTok. So TikTok managed to penetrate the market. So let's talk about what the three things that can stop a network are. And there's only three things in the world. One is government intervention. So if the government says, hey, no more Uber or no more WhatsApp, unfortunately, you've cut the umbilical cord. The second thing is what we call technological failure. So if the Uber technology fails, or the WhatsApp technology fails, or the Google technology fails, and they don't fix it within a quick amount of time, then users will just migrate to other networks because users have a necessity to use search, telecoms, calls, etc. The third thing that can destroy a network is what we call 10x better. If you can launch a product that is 10x better than the incumbent, in other words, if you can launch a Uber, which is 10 times better than using cabs, then you can disrupt the incumbent, but you only statistically have about a 1% chance of doing it. So there are many 10x better products that never see the light of day. But if you have a 10x better product, you've got about a 1% chance of penetrating a market. And those are the only three things that can block a network. So what we realize is that the most important thing in the whole world today, or the most valuable thing in the whole world today, is companies or protocols that can gain network effect. And so if you want the ultimate in exponential thinking, what you got to think to yourself is, can I create a network or a platform that doesn't require more people to scale it, and where every user that joins the network actually adds value to the network exponentially? That's what you do. Now let's bring it back. So I sell my company, I go on this journey, I discover cryptocurrencies, and then I go all in on cryptocurrency. The first thing I did was I went to CNBC. There was no TV show, there was no TV coverage of cryptocurrencies. And I told them we have to start covering cryptocurrency. They're going to cut a long story very short here. About 6 months later, we were the first televised crypto show in the whole world. Until today, we're the only televised crypto show in the whole world. The second thing is I realized that I've got to invest a lot of money in this industry, and I invest a lot of money into Bitcoin and crypto. And then the third thing is a combination of the two. When I was at CNBC, I realized that even though crypto people love CNBC's coverage of crypto, they will never listen to it. They just love the fact that CNBC is covering crypto. But crypto people want a new kind of media, and that's this kind of media. It's t-shirts, it's memes, it's me and you talking on YouTube. And so what I decided to do was to create a parallel to CNBC. It's called Crypto Banter. Today it's the biggest live crypto show in the world. We do 4 shows every day. We do technical analysis in the morning. We do fundamentals in the afternoon. We do decentralized finance a bit later, and we do crypto gaming later on. And what we're building is we're building a 24/7 live, credible crypto streaming platform. So we're one of the only channels in the world that doesn't accept payment for crypto reviews, which means that when we talk about something, you know we're talking about it because either we're invested in it or because we think that you need to know the news. And so that's what we're building at the moment. It's been an incredible, incredible journey. And I can say that going into crypto or thinking exponentially changed my life, and going into crypto was the result that, and being in crypto has completely changed my life. I'm much more financially empowered. I understand networks much better. I know how to build networks. So the next question you probably got to ask me is like, well, how is crypto a network? How does network effects, which I spoke so much about, how does that translate into crypto? Everybody makes investing in crypto sounds so complicated. They talk about technology, and they talk about smart contracts, and they talk about mining, and they talk about validators. But you can actually simplify it. You can say that investing in crypto is actually just investing in networks. So if you think about it, what is Bitcoin? Bitcoin is the ultimate money network. It's not owned by anyone. It's not owned by anyone. But the more people that use Bitcoin, the more merchants are accepted to accept Bitcoin. The more merchants accept Bitcoin, the more people will start using it. The more people start using it, the more merchants. And now you've got yourself this network, a money network. Then you got Ethereum. You spoke about NFT, so let's talk a little bit about Ethereum. Ethereum is, you can complicate it as much as you like, or you can just say, look, Ethereum is a supercomputing network. It's a bunch of computers around the world that do computational tasks. And the more people that use them, the more computers are incentivized to join the network. And the more computers that join the network, the more people are incentivized to use it because it becomes cheaper and faster. And so investing in crypto is actually just investing in networks. That's all it is. It's just you're investing in networks. Now, let's talk about network 1 and network 2. Uber, Facebook, Amazon, Google are all network 1. Network V1. Why? Because they're all owned by the central company. They're owned by Amazon, Facebook, Google. They're owned by the shareholders in the company. So if I use WhatsApp or Uber, but I'm not a shareholder in the company, then I add value to their network, but the only value I get back in return is I get a faster ride, or I get more people that I can talk to. With crypto, it's different. By the mere fact that you own Bitcoin, you add value to the network and you capture that value yourself because the price of the Bitcoin goes up. Because every user of the network is a stakeholder in the network automatically. And so that was my journey. I've been on the ultimate journey. I found network effects. I realized that crypto is the ultimate in network effects. And I realized that just by using crypto, I can add value to myself and to the entire network by just using the networks. And that's how we find ourselves where we are today.
Brilliantly stated. And it leaves me with a lot to go into. But I want to go into something that you said that destroys networks. Because we've just witnessed, so to at least to give my little understanding of my journey in crypto, 2019 is about when I discovered crypto, more or less. So not bad. Yeah, for the people, and then the deep dive, of course, into truly understanding what I'm investing in and really having it was throughout 2020, reading Bitcoin Standard and doing the proper homework, right? So to where I'm today, and as you know, you never stop learning. However, so I want to touch on one thing that you said that destroys networks, which is something that I know is part of the FUD, the fear, uncertainty, and doubt of a lot of people that want to say, hey, this crypto thing or whatever, the government's going to come in and it's over, it's done. These are people that probably haven't done such deep research, but what do you have to say about that? Is there a simple way of letting people know, especially when, and I'll give you a second thing that you can get into, when we know what just happened with stable coins, with Luna, and with what's most likely going to happen eventually with governments creating their own stable coin, et cetera. What to say about this? Is the government not just going to come in and end my crypto journey?
Let's rewind. So your criticism is super fair. And in the past, there's always been the risk that governments will ban crypto. And China did ban crypto. They did. And India tried to ban crypto. But the problem is that India realized that it's become an election issue. And if you look at what's happening in the States, let's talk about what's happening in the States. Joe Biden made an announcement that he wants, he issued an executive order to regulate crypto. And in that executive order, when you read the executive order is quite clear. It says, the first thing is it says that, I think he said 1 in 4 American households now own crypto. Okay, so 1 in 4 American households now own crypto. Now just think to yourself, why would 1 in 4 American households hold crypto? Because they believe in the future of crypto like they believe in the future of the internet, and because they believe they're going to make money. Now, if the government bans something that 1 in 4 households is holding as a symbol of hope for the future, that government's not going to last very long. right? So
it's troubling. Yeah.
So that's number one. Number two, in that executive order, Joe Biden also said that he wants the US to become the leading developer, the leading hub for blockchain and blockchain development. So I think the days of banning crypto are gone. The days of regulating crypto are probably here. Now, everything in the world needs good regulation. I don't think we ever expected that crypto would be unregulated. Regulation has its pros and cons. The pros are that everyone at least knows what the playing field is, which right now people don't know. You don't know if what you're doing is within the law or not in the law. You don't know if it's security or not a security. You also want to protect investors. And then the government wants to protect against money laundering. And I kind of agree with that. I mean, I know it's not a very popular opinion inside crypto, but you can't have people moving hundreds of millions of dollars without some kind of oversight, because those hundreds and millions of dollars could be laundering drug money, could be laundering terrorism money. And ultimately, governments still have a mandate to protect us from terrorist attacks, drug dealers, and whatever else. As much as, the libertarians will tell you, no, we don't need government intervention. I think it's naive to think that governments will let billions of dollars flow within a touch of a button, because that's what crypto kind of allows you to do. I made a transaction once. It was a $350 million transaction. And it took me like 3 minutes to make the entire transaction. Now, just the thought of, just think about like $350 million going from one side of the world to the other side of the world in 3 minutes. Just think about it's an amazing, amazing piece of technology, but in the wrong hands, that could fund terrorists for billions of dollars within 5 seconds. So if you think about, let's go back to 9/11, because that's probably what we can refer to as the biggest terrorist attack, of our generation, so to speak. Just think that if the terrorists could get their hands onto billions of dollars within seconds through Bitcoin. So we'll get regulation. Regulation will be good because it'll tell people what we can't do in the industry, and it will prevent the extremes. Also, I think countries will start to compete to get the brain power of blockchain into their countries. So now what you're getting like Dubai, for example, tax-free, and they've got a regulatory framework for crypto. Just think about what that means. Then you've got the US rushing to regulate. You got Portugal with zero taxes on crypto. So now countries are going, hold on, we want to attract the brain power. How do we attract the brain power? Well, we've got to start putting in regulatory frameworks that are actually favorable, with tax regimes that are actually favorable. So I think we're going to get regulation. I don't think we should be scared of regulation. I think we should just work with regulators to educate them, because there's nothing worse than a regulator is uneducated, because that's when they make bad decisions. And I think crypto is doing that.
Definitely. I mean, it makes me, and I've seen like things like BlockFi, for instance, and go through this regulation and people trying to earn interest on their crypto and all this stuff, and you see these astronomical numbers that people are earning on their crypto by staking it, by holding it in certain places and stuff like that, and you know that it seems it's not something sustainable over this massive term. I don't know. It appears to be, when you see these numbers, when you see someone that is able to just buy my cryptocurrency, put it here, earn 20%, earn 40%, earn 100, whatever, what's going on there?
Early adopters of technological products always have a higher risk, but also get a higher return than later adopters. We're still very early. Okay. And depending on the level of risk that you're willing to take, you will get a return. So right now, taking minimal risk, you could take USDC and USDT, which are basically dollar-backed stablecoins. They are blockchain money, which is backed by real US dollars in a bank account somewhere. And you can lend them out on lending platforms, and you can earn up to 10% on your money, which is about 100 times what you can earn in a US bank account today. Okay, so in the US bank account, you can probably earn 0.1%. Now, there was a more risky bet which paid 20%, which was UST, which was Neuner money, on a protocol called Anchor Protocol. And a lot of people made a lot of money. They made 20% a year. But that protocol collapsed. And when it collapsed, the value of the protocol today is zero. So I don't think when it's always a function of how much risk you are willing to take versus the return. And I can tell you that there's no such thing as a free lunch. So if you're getting 20% return, you got to be as cautious as someone who's getting 20% return. And if you're getting 10% return, you got to be half that cautious. But I do think that I think 10% now is about the standard. So in crypto, we call that the risk-free rate. It's probably not risk-free, but it's good enough. And anything above that becomes risky. And again, there's no such thing as a free lunch. We learned that last week, where we had a protocol collapse. The first time in crypto we had a $80 billion protocol collapse, which was insane.
Yeah, it really is kind of insane. And so for the people here, I mean, you've given a small rule, let's say, with to try and have an understanding of something that's earning more than 10%, maybe do a little bit more, understand your risks. I mean, you're going to have to understand your risk in general, just like you said. But there's going to be people here listening, and this is obviously something that you probably get all the time when people know that you're a part of this is, hey, Ran, I'm 20 years old and I've got $200 and it sucks because, I'm working this job and stuff like that. I'm not trying to get rich overnight, but I would like to be, I want to be one of these guys that I see on the news that just, put his money somewhere in crypto, right? It just seems like this mystical place in crypto land somewhere, and he came back and all of a sudden he doesn't have to struggle anymore. So what do you say to this person and what do they do? Because I know these guys are going to say, that looks great, but what do I do now?
So you do a few things. The first thing is you take your $200 and you invest your $200 in Bitcoin, and you do it immediately.
Why?
Okay, so there's a few reasons. The first thing is Bitcoin is a limited supply asset. There are only 21 million Bitcoin that will ever be in existence. Today, there's about 19 million of those Bitcoin out there, and we know exactly how they're coming onto the market. There's a emission schedule, so to speak. So unlike the US dollar, which is deflating itself because of inflation, because the government printed so much more money, the money that is in circulation is devalued by 9% or 10% in the last year. Bitcoin, we know how much they're going to be. So the first reason why you should put your money into Bitcoin is because there are very few really scarce assets in the world that are in the early stage of their adoption curve. Okay, so think about it like very few assets in the world that are scarce. Gold is scarce, but gold is not really as scarce as Bitcoin because you can always dig deeper and find more gold. They're always finding new mining technologies which extract more gold from the ground. And also, gold is at the end of its adoption curve. In other words, it's been around for long enough. Now, Bitcoin is scarce and in the beginning of its adoption curve. So you're getting more people who want less Bitcoin. Okay, that's the first thing. So the first reason why you should buy it is because Bitcoin is probably a great store of value. And if you look at it over time, it's still the best yielding asset in the world of all time. So there's never been an asset that's made better returns. Second reason is now the price is low. We've just had a market correction. We're at 40% of the highs. So anyone who's buying it now is buying it at really low prices. And if you know the old adage is buy when others are fearful and sell when others are greedy. So you're buying at the right time. Lastly, and most importantly, is by buying Bitcoin, you're learning a new skill. You're learning how to buy, sell, store, trade cryptocurrency. Now, that's like learning how to use SMS and WhatsApp before the world. It's like learning how to program computers or learning how to play computer games or learning how to use WhatsApp or social media before anyone else. And so just by buying Bitcoin, not only are you adding value to the network, not only are you protecting your money from inflation, not only are you probably going to make a profit if history is anything to go by, but you're also learning how to use the newest and most disruptive technology in the world. So you and I have probably lived through a couple of really disruptive technologies. We missed electricity. So electricity came before us. TV came pretty much before us. Then we had internet. And I think, to be honest, I think you and I were both a little bit too young to really capitalize on the internet revolution.
Right.
Then we had phones, mobile phones. And I think, to be honest, you and I were a little bit too young to really capitalize on mobile phones. Then we had social media. And to be honest, I didn't make a big I didn't capitalize on social media in terms of a revolution. I didn't make life-changing money on social media. I don't know about you. But
no. Yeah.
They say that this revolution, and when you understand the power of cryptocurrencies and all the industry they're disrupting, they are the most disruptive technology in the world today. So we're living in a time where you've got the most disruptive technology in the world today, disrupting pretty much every industry in the world, and we can go through the industries in a couple of minutes. And you have an opportunity to learn how to use it early, and just by learning how to use it early, to hold a share in that disruption. So if you hold Bitcoin now, and you learn how to use it, not only have you educated yourself, but you're also going to gain value as the network continues to grow. And I think I proved to you that the network cannot stop growing unless there's government intervention, technological breakdown, or a 10 times better competitor, all of which are very, very, very unlikely at this stage of the game.
So with that being said, that makes it easy for this person, this kid, or whoever who just has a little bit of money and they throw it in there. Perfectly fine. Just as a quick touch and add-on for that mentality, since I'm going to stay with these people. How many of the people that you have come across and within this industry that have made enough money trading the volatility of Bitcoin versus investing, taking those $200? You didn't say to take it when it pops up, just sell it. Like, do I want to sell my Bitcoin? Do I want to give them a bit more of an understanding of why it's so important to hold on your Bitcoin, and for how long? Like, what do I do when it goes up? What do I do, right?
If you would have bought $100 worth of Bitcoin when it launched 10 years ago, or whenever it was, and you would have held it to today, you would have had north of $200 million. Okay. I invested into 5 protocols in 2017. I invested maybe 7 protocols, and I invested $5,000 in each protocol, which is $35,000. That portfolio at one stage was worth $40 million. Okay. I never touched it. I didn't trade it. I just didn't touch it.
Right.
So let's break down trading versus investing. There are people who can trade. I've never met a trader who's made more than an investor. So there are people that trade Uber every single day, but who's made the real money on Uber is the investors. Those guys that put in 50 grand at the beginning, and that 50 grand today is worth 150 million or 250 million dollars from putting in 50 grand. Now, I don't care how good you are as a trader, you would never have made that kind of money. You would have got yourself into multiple tax implications depending on where you are, because every trade is a profit generating event. You know that. But more importantly, the percentage of people that actually make good traders is close to zero. It's a very, very, very unique skill. And let me tell you another thing about trading. Trading is not for humans. Okay, because trading is the opposite of how humans feel. So you know how I learned to trade, and I'm a reasonable trader now. I was a very bad trader. I'll tell you. The first time I bought Bitcoin, I paid $500 for it. It went down to $300. I sold it. It shot back up to $700. I bought it back. It went down. It went down to $500. So human beings are terrible traders, and so if you want to be a good trader, you've got to trade without emotion, and you've got to trade the opposite of what you're feeling. It's very hard for people to trade the opposite of what you're feeling. When you're feeling euphoric and you really love Bitcoin, it's very, 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 very difficult for you to sell it, because you get an emotional connection to it. And it's a really deep emotional connection. It's an emotional connection on a chemical level. We can go through the chemical breakdown, but in a second. But it's a really deep emotional connection. And so the problem is that you struggle to buy and sell at a low. Like now, everybody's scared. No one wants to buy. When it was at 69,000, everybody wanted to buy. They thought it was the best thing ever. At 30,000, people don't want to buy it anymore. Crazy shit. Because humans are bad traders. Now, if you just bought it and hold it, you would have bought it in 2017, 2018, you would have paid $1,000. You would have had 30 times your money now in the peak of the correction or peak of the blood. And at the top, you would have had 70 times your money. I don't know if I could make that kind of money trading, 70 times your money.
Right.
And so in an emerging technology, when you're part of an emerging technology, your best bet is to buy and hold for long periods of time as the technology gains in adoption. It's just a rule. And so I don't encourage people to trade. I encourage people to take very safe multiple bets on technologies and just to hold them forever. And some of them will go to zero, but those that succeed and get network effect will make you what we call wife-changing money.
Right. And I want to shift before we'll come back to crypto here for a second, but this one is more based around your journey. And I mentioned in your intro that you speak to billionaires, and obviously you're doing deals and things like this at a high level, right? And I'm curious, out of the let's say the billionaires that have you talked to Michael Saylor?
Yeah, many times. Many times. He's been on my show many times. Yeah.
Okay. Yeah. This guy strikes me as brilliant for a whole host of reasons, and not a whole lot of them have to do with money. Just on the way that he sees the world, the way that he understands and structures things based on his engineering background and seeing things through energy and stuff like that. I find his mind very good. He has an excellent understanding of history. Insane, right? Yeah. He's
also
one of the,
a very good orator. So he has a way of explaining things very clearly. He takes very complicated concepts and explains them very simply.
Yeah. And so, I imagine you've run into some other characters quite like this. And so my question to you is, because we always are giving advice about whether it has to do with the game and how you get better and persistence and all these other things. And we like to learn from the greats. What have you learned from these people? What strikes you as something that they understand? Because you went on your own journey in order to gain this knowledge and stuff like that. But these guys who have been ahead of you in stuff like this, what are you taking from these guys?
So, I mean, if you take the two most brilliant people in crypto at the moment, I think Michael Saylor is arguably one of them. Another one of them is CZ, so 𝗪𝗪𝗟𝗟 from Binance. He's the founder. He's the founder of Binance, and today one of the richest people in the world. I think his personal wealth is north of $70 billion. And I mean, you could probably put Elon Musk into the same category and stuff like that. What do they all have in common? They are single-minded in what they believe. They have conviction like none other, and they go all in, right? So like Michael Saylor is all in on Bitcoin. He's never selling. He's going all in. He took debt. He took a public company, took all his money, took all the debt to the public company. He's all in on Bitcoin. And today, if you look at Michael Saylor's purchases, actually Michael Saylor is negative now. If you look at where the market is and when he started buying, his net position is negative. He hasn't changed his tune. He's still completely obsessed and completely focused on crypto. And the same thing with CZ. CZ is completely focused. He doesn't have 1 cent of fiat money. He only has crypto. Wow. So what are the traits that most successful people in the world have? They have a sense of, so the first thing is they have a sense of conviction that nothing can sway them. Okay? So nothing can sway them. The second thing that they have is they have a sense of entitlement. They believe that the world owes them riches, success. So I don't know how vulgar can I be on your channel? Because
you can, you can say whatever you want. Like I said, I keep saying this in like every other podcast, but we had Porn Star. We have another podcast where we're insane. Go for it, man.
Okay, so this is I don't know if I should say this, but it's bad. We're speaking as friends here, so I call it.
Go for it, man.
I call it dog fuck. Okay, so I always call the most successful people in the world dog fuck, and I'll tell you why I call it dog fuck. Because when a dog is going to do its thing, you ever seen a dog that's going to shag another dog? Well,
yeah,
you can hit that dog with a broomstick. You can spray that dog with water. That dog doesn't care. That dog has got one thing on its mind. And so I always
single focus.
I just say that that's the kind of focus that these people need to have. Like at the office, we call it the dog fuck index. And it's like your sense of like, how hard will you run before you stop? And that's like the index that we use. I know it's not the best word, the best terminology in the world, but I think it best paints the picture.
Totally.
There's people here listening to me and they're laughing at dog fuck.
But it says the point, because that's it. I mean, now I can't even remember what the podcast that I'm doing where I had this conversation, but we live in a distracted world. I mean, you've probably read books like Deep Work, The One, or have you?
No, I'm not a big. Okay. I read some books, but I'm not really a big book reader because it doesn't suit my.
How did you get through Harvard? How did Harvard? How do you do that?
I mean, I can read many books, and I've read many books, but I prefer to read snackable content. Like for me, I think you can probably say everything you need to say in 10 minutes on a great Medium article, and you can dig much deeper on
simplicity.
Yeah, I mean, I obviously read when I'm on, very vaguely and broadly when I'm on holiday or vacation, and I'm not in accumulate mode. I was saying, you want to be smart, you need to process a lot of information. You need to get a lot of opinions. And I think today I'm consuming about 8 hours of podcasts every single day. So every day I consume about 8 hours of content. I consume it on 2-speed. So it takes me about 4 hours.
Same.
Yeah. And the reason why I think 2-speed is very good is because on 1 speed, your mind can go to multiple places. But on 2-speed, you actually have to you really have to tune in to listen, right? So 2-speed for me really changed the game.
Yeah, that's it. I mean, you have to have, and I mean, this is stuff that we've touched on, and what I was going with the reason why I was mentioning those books and things like that is because it does seem like the majority of Earth. Now, when you're doing this and you're listening to these podcasts or whatever, I'm curious actually. Before I even go on, are these all based in one sector? Are you looking for something specific, or are you just trying to gain a good knowledge of the world, or what are you listening to really?
Probably 60% of what I listen to is cryptocurrency related, and I make sure that I listen to every single point of view from every single channel that I can. But I have a rule where I try and listen to places where I get a certain amount of alpha per minute listened. When I say alpha per minute listened, knowledge per minute listened, because there's some podcasts that go on forever and don't give you knowledge. Yeah. For me, I've got a very strict rule. I like to, so I've got my library of crypto stuff. And so crypto is obviously 60 to 70% of what I consume. A lot of other stuff that I consume is general business. So like the All In podcast, I don't know, it's with Jason Calacanis, 𝗪𝗡𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗪𝗔𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫𝗫 half every week of consuming. I'm also fascinated by human behavior. So why humans do certain things. So, like the fact that we make certain purchase decisions or investment decisions is not coincidental. It's because of a very complex makeup of chemicals and how people are willing to guide our chemicals. So a mixture of dopamine, oxytocin, serotonin. And so I'm very fascinated by how they all work together, and then how you can use that to sway how people think and what they buy and what they, So I listen to a lot of information on stuff like that. So pretty much like a broad range. And then obviously like human health. So like I listen to a lot of stuff on like, fasting, not fasting, consumption of sugar, not consumption of sugar and stuff like that. But I'd say 70% of it is crypto because that's where my mind is.
I mean, that makes sense, obviously. And you can't have too much of a fractured mind. It's important to, have the blinders on, especially when you have a focused intent on what it is that you're trying to achieve, and then taking the other stuff. So you can also have this different and wide range type of stuff to help make you, to make a decision.
Sure.
But I want to go to, this is also kind of based in human behavior and psychology. Every single crypto crash, to me, it seems, and for the limited time that I've been in, is the end. It's the end of crypto. Every single stock market crash is the end of Earth, basically. Every recession seems to be the end of days. So given that you have a longer period in this, why do you think that is? How to navigate that, and how to navigate this current recession, all the inflation call? How do we navigate that as just normal people?
So everything in the world works in equilibriums. Seasons work in equilibriums. Sometimes it's hot and sometimes it's cold, but ultimately there's a certain equilibrium. And everything in human behavior works in equilibriums. It works between extremes. Extreme fear, extreme greed. Extreme fear, extreme greed. And in order for the world to stay in equilibrium, everything works in cycles which oscillate above and below a median point. Now, historically, if you look at markets, the markets haven't disappeared since whenever they started, 1800s or whatever, whichever market you look at, take a market. Markets have never gone to zero in aggregate. So obviously, in individual, certain things can go to zero, but in aggregate, things are not going to zero, because humans are evolving, technology is evolving, and as technology and humans are evolving, so more value is added to the world. And as more value is added to the world, that is what is displayed in a chart of the stock markets. When you look at a chart of the stock market and you just draw a straight line from 1900 to today, what you're actually monitoring is the abilities of human to add value, right? So that's what it is. We went up and went down, but ultimately that's how much value humans have added to the world is all captured in the biggest companies in the world, which is today which is what you could say is the stock market. Now, markets work in cycles, and markets work between extreme fear and extreme greed. So you said it was the end of the world. Let me remind you of a few times when it was the end of the world. COVID. Do you remember watching the markets crash and saying, that was the end of the world?
Yeah, totally.
Was it the end of the world though? Or did the markets come back and do 100% returns after that? Okay, so that wasn't the end of the world. Now let me give, I mean, you can go back to multiple times. .com crash, 2008 housing bubble. I remember. Now, one part of it is because you get panic, and panic spreads and so does euphoria spread. Extreme emotions always spread, and especially panic. Panic spreads much quicker than any other emotion because it's I panic you, you panic me. Humans are much more scared of losses than they are happy of profits. So if I said to you, would you prefer to lose $10,000 or make $10,000? The pain that you would feel losing $10,000 is much more than the joy that it would give you to make $10,000. So you're always more loss prone. Right. So when you're faced with taking losses, what do? You want to protect. And how do you protect? You get the fuck out. Right? That's how you protect. And then you got to justify why you got out. Because why did you get out? Because the world's about to end. Because you got to justify it. You can't say, I got out because I was a chicken shit. So no, I got out because the world's about to end. And you want to know why the world's about to end? I'll tell you. Because the Fed is tightening from inflation. And that's why the world's about to end. You know why the world's about to end? Because there's a virus, and the virus is going to kill everyone. No, that's not how humans work. That's not how humans work. Humans always recover and always recover better, right? And so, look, are we at the bottom of the cycle now? I don't know. It feels like it. Could we go a bit lower? Yeah. But if I take a long-term view, and I take a view of a year or 2 years or 3 years, can you give me a period in history where in a year, 2 years, 3 years, in our history, because don't go back to the 1900s, but go back in our history, have there ever been a 5-year period where there's been no growth? No.
Yeah, no.
And so just you got to remove yourself from the emotion. You got to remove yourself from the emotion. And the people who can remove themselves from the emotion do the best. And that's why right now buying into stock markets and into crypto feels very, very, very scary. But go back into history and see and say, look, every time crypto's gone down 50%, how has that been as a buying opportunity? Probably the best buying opportunity in the world. You can look at it on the charts. Every time the stock market's done a 30% correction, which is where we are at the moment now with the NASDAQ, 27% down. What's happened to people who bought it at 27% down? Have they ever lost money over a long period of time? No. This time's going to be no different.
Yeah. I mean, it's one of the hardest things, like you said. I mean, as humans, it just makes sense that when things are bad, you completely get it, for that to be the knee-jerk reaction, unless you have this macroscopic look at the world. I mean, that goes to also for not just stocks and crypto and finance, but also for life. I mean, you fucked up. It's everything, right? You messed up on the game. You messed up on the thing. It doesn't really matter. It doesn't. Like over the course of time, as long as you're continuing to work and add value, like you said, then you're going to be. It's astronomical. Actually, where
it's
things
human
go.
behavior. It's the value that you add to the world. Let me break it down for you into a very simple way. If I would have come to you at 69,000, which was Bitcoin's high, and I would have said to you, "Hey, well, do you want to buy some Bitcoin?" You'd naturally say to me, "It's too expensive, man. It's at an all-time high." Then I would have said to you, "Well, when are you going to buy Bitcoin?" You said to me, "Not when the price halves. If the price goes down 20%, I'm buying." Okay, so it went down 20%, and then it went down another 20%, and the price halved. Now, what if I would have said to you on that day when we were at 69,000, I would have come to you and said to you, "Well, listen, don't buy Bitcoin. Give me the money, okay? And when we get to 50% of the price, I will buy Bitcoin for you. I won't phone you. I'll just buy it." Okay?
Yeah.
You would have said to me, best deal in the world, right? If you can get Bitcoin for 50% of what is trading today, don't worry, I'm buying. All right, here we are. We're under 50%. Okay, where are you, bro?
Right.
You see, so that's the human psychology. And you know what?
Yeah.
The same people that are running away now from crypto, they will be the ones running to the light like moths to a flame when Bitcoin gets to $100,000. Because that's just how human psychology works. And that's why I said to you in the beginning, humans are very bad traders because our emotions aren't built for trading. And that's why, for me, maybe now is a good time to buy. And if it goes down, it's probably the best time to buy. Just keep buying because it's an emerging technology which is going to grow. That's it.
Yeah. I mean, great. And you mentioned now, which is perfect because I kind of wanted to also get, since we're closing in here, these sort of guys stay away from price predictions. I haven't seen a whole bunch of your shows, so I don't know what you do. But you mentioned that Bitcoin could go up to 100K, right? Can it go more than that? When? All this stuff. How long are people waiting? Is that something to even worry about? Or
I'll tell you what the problem is. To ask someone to make a price prediction, You're asking me to make a prediction around what the Fed's going to do, how quickly they're going to tighten interest rates, because Bitcoin is very correlated to other markets at the moment, etc., which is crazy. So if I made a price prediction, I'd have a 1 in a million chance of getting it right and a 999,999 chance of getting it wrong. So it's a bad trade on my side to make a prediction. I'll give another prediction, though, which is actually a prediction based on science. And the prediction says that Bitcoin has network effects. And by mere virtue of the fact that it has network effects, it means that it is growing at an accelerating rate. And if something is growing at an accelerating rate and there is a limited supply of that product, then, the best way that I always do it like this. If you want to really understand Bitcoin, think about 10 people who have been on a fast for a week, and they're 5 meals. Okay? So initially there's 5 meals and 10 people. Then one guy eats. There's 9 people, 4 meals. Then one guy eats. There's 8 people, 3 meals. Well, hold on, getting scary. Then another guy eats. There's 7 people, 2 meals. Now it starts to get really scary. Now another guy eats. There's 6 people and 1 meal left. Now what's the value of that last meal?
Oof.
You see?
It's insane.
That's it. When you've got a scarce asset and you've got... and the asset is on an adoption curve, like Bitcoin is on an adoption curve. The adoption curve is like that. Then it doesn't make sense that it's going to go down in value. It just doesn't make sense. It's just how quickly will it go up in value? And it starts to go up in value quicker and quicker. When there were 2 meals, the meals were cheaper than when there was just 1 meal left. And that's the analogy that I try and use. That's the analogy that really hits hard.
Great.
There are only 21 million Bitcoin in the world. I would say that 5 million of them are gone forever, like gone. We never see them again. It's their history, okay? Because they lost, and people that have lost their keys and don't know where they put their Bitcoin in their computers. 16 million Bitcoin in the world and 7 billion people. Okay, cool. Let's say that of the 7 billion people, probably the market for Bitcoin, let's say is 1 billion people. There's 1 billion people and 16 million coins. You do the math,
Right. Yeah.
You do the math. More than that, I can't give you. I can give you the variable.
Totally. And so, I mean, that being said, there's a whole lot of other things. We spent a decent amount of time talking about Bitcoin because that is really the market mover here and the one cryptocurrency that everyone should have a general and good understanding. But for what's called altcoins, and maybe you can explain to everyone what an altcoin is, how do you deal with those? And how do you recommend somebody who's just getting into crypto and trying to, they see these little small numbers and like a little chance and everybody gets rich with an altcoin or
gambling and gamblers will get wiped. Rather invest in things so it's very simple. Just go back to what I said to you early on. Invest in things that you believe are going to have the network effect, right? Just invest in networks. So look at the protocol.
People not do that with altcoins, though? Just to push back?
So what is an altcoin? An altcoin is any coin that is not Bitcoin. They call it an alternative coin, right? So it's an altcoin. So you got Ethereum is the biggest altcoin. Ethereum is a supercomputing network. It is a network of computers that compute computational tasks. Okay? You've got, let me give you some other networks. You've got Arweave, which is a file storage network. You pay once and you store your files on the blockchain forever. Okay. The files can never be amended and they can never be destroyed by government. So what's on the blockchain is on the blockchain. That's a file storage.
What's Cardano?
Cardano is a supercomputing network.
Okay.
It's new. It's like Ethereum, but it's newer. And it hasn't got as much usage yet. Now remember, you want to invest in networks that people are using, because the more people are using, the more computers start securing the network, the more people use the network. Now Cardano may or may not get that adoption. We don't know yet. It hasn't got it yet. Ethereum's got that adoption. Bitcoin's got that adoption. Without giving my own channel a push, is you want to invest in crypto, you need to know what you're doing. Don't go to Twitter and try and invest in the back of Twitter, because history shows you're going to get wrecked. You need to really understand it. We have a very fundamental approach as to how to do these things. I think you've kind of heard how my approach works. And we cater for people to do it. That's what we do. So, to simplify it, I'd say invest in protocols that you think are going to get the network effect and get adoption. And then I always say, invest in protocols that you think are going to change the world, and then give them enough time and support to do their thing. And that's the best investment advice in the world.
Last couple questions I've got running in here since you mentioned Twitter. Have you spoken to Elon Musk before?
No, I haven't.
Never.
No.
What are your thoughts on him? Because he's a controversial figure within the crypto space.
Absolute genius. I mean, there is a new breed of genius out there, and these geniuses have a tendency to create multiple unicorns. And Elon Musk is the number one. So like Jack Dorsey, he was running Square, which is a unicorn, and Twitter, which was a unicorn at the same time. Like most people will never do a unicorn in their life, but these guys are doing multiple. Now, for me, Elon Musk is the most incredible character in the world because he built Tesla, boring company, Starlink, SpaceX. You go through all of these. You go through all of the things that Elon Musk is doing, and you go, hold on, like one guy is at the forefront of the biggest industries in the world, putting a chip in people's brains, creating free internet for the world, changing the way that we transport ourselves, changing the way that we power the world's energy. Like one guy. And, it's not like he's the type of guy that's not hands-on in the detail. Like when you hear interviews with him, he's like the CTO of this company, he's the CEO of this company. He's like, he's in the shit, man. So, I mean, to me, he's one of the most incredible human beings in the world. I've read his book. I've listened to multiple audio books and interviews with him. I think he's a fantastic guy.
And I'll finish up with this since it's definitely that fringe question that I've got to get into and at least understand. Conspiracy theory. I'm going to throw this out here because you're deep within it. What to think of the idea of the Great Reset, cashless society, the fact that they're trying to push this, or I'm using they in loose terms, but you must have come across this. You would be at least a rational mind to say, okay, there's something here, or absolutely not. This is unfound claims at all, or maybe it's a bit of both. Maybe there's a little bit of truth that there's a push on one side and not. So where do you fall with that?
I think that people drive agendas, and that agendas are created through personal gain, and personal gain can either be financial or credential, or credential. And you will always drive an agenda based on either a financial agenda or a credential agenda or something that makes you feel good. That's pretty much what you're doing. And I think, when I look at what governments are doing, I appreciate that governments have a very, very, very difficult task of managing societies with lots of people, some which are good, some which are bad. And we've also seen that when societies are unmanaged, they usually go to shit. Like that's just what happens. But then how do they actually manage society? So like I lived in I'll give you an example. I lived in New York and I lived in Miami. And I lived through both in New York and Miami through COVID. And I saw a massive difference between how New York was managing COVID and how Miami was managing COVID. New York was wear a mask, everything is closed, we're in lockdown, wear a mask inside a restaurant. And Miami was like, you be you, and, like it was like, you be you, and,
right.
We're still having spring break and whatever else. And, and ultimately net, I think from a statistical point of view, they both pretty much statistically had the same outcome. Their approach was different, and then their motivations were different. So going back to your question, do I think that there's a conspiracy theory? I think that there are groups of people pushing their own agendas, and those people go in and out of power. And right now, there's a group of people in power which have a certain agenda. Why am I so scared of central bank digital currencies? Because I've lived in New York. Because I know how many rules and regulations there are in New York, and I know how strict they are about policing those rules and regulations. Much more than, say, example, Miami, just giving you a place. Right. Now, imagine when there's a central bank digital currency, what that means is that you have a wallet and the government can see and control every transaction that you make. So imagine that the government gave you dollars and said, look, you can use them wherever you want, but we can see where you're using them real time. Okay? Now, you go to Starbucks, but it's outside of the place where the government wants you, and they say, oh, you left your house during COVID, your money's not going to work.
Yeah.
That's the fear.
That shit's scary.
That's the fear. Sure. there is a curfew. After 10 o'clock, your money is not going to work at night. You need food. You can't buy food because the government's controlling where and what you can and what you can't spend. Sounds too scary for me. I don't want to give the government that much power. And that's one of the reasons why I want Bitcoin, because the government can't control it. It's beyond government control. Right. And, I think Powell has mentioned it. The UK have mentioned it. They're all working on these, what they call central bank digital currencies, which is money on the blockchain that governments can control. When that happens, that's going to be our reality. It's like some other things. You got kids and the government doesn't want them to go to certain schools. Your money's not going to work there. And they say, look, great. You want to get your kid in there, that's great, but your money is not going to be able to pay the school. And so through that, they can start controlling what you can and can't do. And it's giving the government control of your money is giving the government ultimate control. They can tax you when they please, how they please, they could say, hey, listen, every time you buy a burrito from Taco Bell, it's a 50% tax. And that's the end of it. And that's it. Yeah. You can't argue it. And so I don't want to give the government that kind of power. I just don't.
Yeah. I mean, it absolutely makes sense. And you will have people that will say, well, if you're not doing anything wrong. And of course, like you said, the only thing is, oh, you didn't know that I was stuck in my basement for 3 days. I really got to get some food. It happens to be past 10. There are all sorts of things that could stipulate.
You said something. You said, but people say, but what if I'm not doing anything wrong? Anything wrong according to who? So let's work down the spectrum.
Right. Yeah.
What we think is okay in the United States is not okay in North Korea, right? Like it's not okay. Surfing the internet is not okay in North Korea. Okay, so, but I didn't do anything wrong. You surfed the internet. Okay, so let's go down one level, China. Okay, so I'll give you a very simple example. Smoking marijuana in China is, if you're carrying a marijuana pen, it's a death penalty. Okay, you get a death penalty basically, or you got a life imprisonment. But smoking marijuana pen in certain states in the United States is completely legal, and you can do it on the street.
Of course.
Okay, now we know who's in power today. I'll give you even a better example. Living in New York and living in Miami at the same time during COVID, I was not doing anything wrong by not wearing a mask in Miami. But if I was in New York and I was not wearing a mask, then I was doing something wrong. So I was. That statement of I was not doing anything wrong is true to where you live today and who's in control today. But what if they turn up the heater just a little bit?
That's all.
And they did it. They did it during COVID. They turned up the heater. They told you couldn't leave your house at all except to go to the supermarket or the drugstore. And they told you that you had to be home by 10 o'clock. And they told you that you had to wear a mask. And they told you that you couldn't ride the subway. They told you that.
Right. Yeah.
Imagine during COVID, if you weren't registered as an essential worker and you wanted to travel and you couldn't pay for the train. Just think what that means.
Right.
There's no one to talk to. You can't phone them and say, look, my wife's in hospital and she's... No. Your money doesn't work on the train. End of story. Your wife's in hospital. She's about to die. Sorry, dude. That's not... The money won't allow. Tough luck.
Yeah.
But I'm not doing it. Then you want to catch an Uber to go to the hospital because your wife's there. You're not doing anything wrong, or are you? You're doing something wrong. Now you are doing something wrong. And that's what I say. Be careful of that line, I'm not doing anything wrong. Because right now it's not wrong. But when they turn up the heater a little bit, game over. And I don't want to be in that. I don't want to be in that boat when that happens.
Yeah. Well said. And so, guys, there's obviously plenty for you to learn. If this podcast has piqued your interest in crypto, which it should have by now, or at least understanding what's going on, go over to Crypto Banter. Go check out Ran. Check out all the rest of the stuff. We'll link, obviously, everything. If you guys are just listening to this, it's in the show notes. It's on YouTube. You know where to look. It's in the description box. I appreciate this, man. This was awesome. There's going to be a shitload of questions and stuff like this. So we'll have you back on some other time, but I appreciate it.
Let's do it again.
All right, for sure. Guys, we'll see you later.
Listen, and good luck with your games, man. Good luck with your football. Good luck with your games.
Thanks.